the occupier market is slowly improving, but it's never going to recover as it did in the last cycles. Because there hasn't been any development finance, the buildings haven't been built, so you are seeing rental growth in places, which is more to do with the lack of product, I think. But no, I think what we're seeing in London particularly is occupiers becoming very, very building specific rather than location specific. And I think that people are willing to move to buildings that suit their needs, where they can put cycle racks in or whatever they need. So I can see it sort of improving slowly and leading to growth.
I think generally what we're seeing is there's pretty good take-up in our German funds. That's about 98% leased up. There's not a lot of void there. There's still a bit of void in the Benelux, albeit the Benelux tends to be the main logistics route into the rest of Europe from the main ports. France is weak. Spain is looking to recover. I think, as Richard was saying, there's little spec development going on in any of these markets, which is the one thing that's leading to a sort of shortage, which may produce some, well, I'll call it rental stability rather than growth. But there may be some growth coming through, as bits and pieces coming through in Frankfurt. But generally, I think the question I've still got is, a lot of the operators and the occupiers' margins are still so thin, they really can't start pushing their rents up that they pay.
I don't disagree. I think if you look at our entire book, you go through every single building, what you have is occupiers who are not necessarily willing to pay more rent, but what they are willing to do is re-sign and renegotiate leases. They're willing to take on longer terms than they would have otherwise done. Their TIs are coming down, what they require us to inject in. And what they want to see is a vibrant owner. I mean, a lot of the people that we deal with have spent 6 years dealing with an institution that has no capital and no real willingness to interact with them. And a capitalised, even if he might be opportunistic owner that walks through the door and says, I want to do something with you to improve the physical real estate that you occupy, is enough to trigger them to be willing to do things they wouldn't have otherwise done in the lease terms. And the reality is, in many of these situations, what has put off institutional capital investing in them in the first place isn't the rent level, it's the lease term. I think there's signs of stability, but to your point, there isn't an awful lot of signs of them pushing rents right now, except where there's very extreme shortage, and that's only a very limited number of places right now. That I think will probably increase over time as the economy ticks up, but it'll be a slow process.